Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the euro currency. So just minimal changes we have for the whole week. Next week probably will be something similar, just because New Year's Day right in the middle of it. Here's, well, some moments exist that actually makes it a bit sophisticated overall decision making on direction of the position. First of all, nominally we've got the crossing of the MACD lines, which means that we have bullish trend direction. Since we do not have any bearish directional patterns, at least by the Chod-Napoli method, we do not have permission to go short. Whatever bearish picture looks like, it's in fact forbidden by the method to go against the context. But here we have some, well, tricky moments. First of all, if you will take a look at this candle, on this chart, we do not have the grabber, bearish grabber I mean. But if you take a look at the futures, this is particular January, but if you will take a look at the next major futures contract on the March, you will see that we also have the grabber here. This grabber stands in place, and probably if we'll take a look at the continuous futures, it also could show the grabber. It's just a moment. Here's we do not have it on the continuous futures. The same thing you could meet if you take a look at the Forex providers, big Forex companies. So if you, for example, will take a look at the FXCM, you have the futures, you have the grabber. If you take a look at, for example, Saxor, you don't have it. So that is a bit tricky moment exists, because it could really help a lot if we have had the really bearish pattern. It might be a really great help. But at the same time, what else bearish moment we have? We have a kind of the bearish dynamic pressure. Since, as I said, trend officially turns bullish, now we could plot here the divergence that stands here, as you can see. But at the same time, you could see that overall market direction is down. It doesn't support any bullish hints, at least for now. Besides, in recent 2 weeks, including holidays, after the collapse that has happened in the middle of December, market stands in a tight range. And it doesn't show any rebound, despite that it might be treated as a kind of the double bottom here or something. When the market shows the double bottom, it should be some kind of the, well, it behaves in the same manner as with the double repo pattern. So it challenged the lows, trying to break it down, how double bottom works. But then, when the bulls are stepping in, bears capitulating, and market start pushing it back. Here, you do not see it. So yes, we've got some minor reaction on the oversold condition, but since then we stand in a sideways action. It's not typical for reversal pattern. Besides, if you take a look at the big chart, you could see that market stubbornly stands below 105.50 broken area. In fact, this long-term standing only thanks to 104.50 monthly 50% support. And this explains why market holds here for so long time. Previously, at this point, it also was oversold on the weekly chart, but currently nothing more. So, taking it all together, nominally, we do not have rights to go short here, but considering of the short position here is very temptative. By these moments, on the cross-market analysis, you could see that the 10-year bonds, as dollar index also stands flat. Probably here we do not have any grabbers, right? So, but the 10-year bonds on Friday has moved higher once again. This is also a negative sign for the euro. Finally, by taking a look at the intraday charts, you could see that on hourly chart, market has moved, gold, market has moved slightly higher, but it still remains below the B point, B top. And correspondingly, with this performance, it keeps chances as for upside butterfly that we discussed. But for the bulls, there was no moment for taking position. We said that if you would like to go long, try to do this as close to the C point as possible. On some forming on the right arm, but right arm is not forming yet. But at the same time, downside pattern is also potentially valid. And this point is much more attractive for position taking rather than in the bullish direction, because it stands very close to the invalidation points. The potential loss on this trade will be very small. And that is final points that, makes the overall combination of these factors temptative. So here I wouldn't call for taking the short position because, as I said, if we keep pure method of the Jordan Napoli, we should not take the short position. But I will keep it for you to decide. It's up to you. So if you will decide that this in general possible and acceptable and the risk is reasonable, I do not see any real problems here to consider impossible taking the short position here. So that's towards what we have on the euro. Let's see what will happen next week.